think I've lost you. David.
Property, I guess.
Right, we're back. Okay. Yeah, so we've done...
Chris Eubank is.
Yeah, I thought I remember seeing a testimonial or some comments from him on something once saying about you guys. That's good. That's good for all the boxing fans out there. Anyway, let's crack on. We've done a few of these now. We try and do them every quarter, as you know. We've got people mainly from Asia, but the Middle East as well, some in the UK. So to those people, good afternoon and good morning, or even good evening. What are we doing? We're just having a bit of a chat today with David Yedderley of Prosperity Property. Joe Billingham will hopefully be joining us, but he's feeling a bit under the weather. It's not COVID, but hopefully he'll be joining us. What are we going to do? We're just going to have a bit of a chat, as we usually do, David, about the sort of state of the UK property market at the moment, where we see it going this year into next year, how the budget's affecting the market, and then what that means for you guys. So where are you guys targeting? Where are you developing? Where are you building? Where do you think are good locations for people to be buying? We'll have a bit of a chat on that. We will then do a bit of a chat box thing, which I think for everyone watching is down at the bottom. You can put questions in there. We'll do a bit of a Q&A, and then we've got sort of, again, probably about 50% clients, 50% non-clients. So for all those clients, we'll then go through the developments and do a bit of a development update at the end.
Yep.
How does that sound?
Fine for me.
Excellent. Okay, so David, couldn't you just, I think a lot of people probably know who you are, but for those that don't, could you just sort of perhaps tell us a bit about yourself, what you do at Prosperity, and maybe just a short intro on Prosperity as well?
Yeah. My name is David Yedderley. That's a Cornish name, so I am British through and through, or even English through and through. So I've been giving advice to clients on financial matters for probably the last 33 years, originally in the wealth management profession industry, but then more recently, over the last 7 years now, I morphed myself into property and came to work for the founder of Prosperity, which is Joe Billingham, who, as Callum said, sadly can't be with us today. And my experience in managing all mediums of investment, from unit trusts to bonds to property, is quite good. So it's broad based. I can't give advice on those regulated investment products anymore, but the move to property was well timed. It was at a time when property was starting to recover after the global property crash of the noughties, and the last 7 years has been a fantastic time to be in property, and been very exciting, deep learning experience for me, and I've been obviously on those shirt sleeves all the way through it, so we've had a great experience. My role is global ambassador, which I'm not sure whether that sounds highfalutin or not, but it really is. All it really conveys upon me is the ability to speak to all of our clients, whether they're UK based or international. And in the good old days before the pandemic, it enabled me to travel around the world, doing seminars, meeting existing clients, and our other introducers apart from APW, as well as APW, and just trying to spread the word of UK investment property and prosperity generally. Prosperity is the business that Joe Billingham has been running for the last 15 years, Birmingham based, and has focused on the buy-to-let investment market. Until recently, that's been almost exclusively apartments, and the focus has been in marketing apartments in city centre locations, not necessarily cities which are regarded as highly popular already, but cities where we've identified through our research capabilities that there are a number of reasons in place enable the city to grow, and this is usually due to an improvement in the infrastructure, railway stations being built, bus depots being improved, airports thriving, road systems, of course, but also the additional advantages of new employers coming to a region, large hospitals being created. All of those factors tend to generate new activity in a community, and new activity leads to the need for housing. And so the environment for an investment is generally regarded as very good in those circumstances. So that's been our focus, has been finding sites around the UK where there's a real and strong potential for capital appreciation and just an income yield from the value of the asset. And so we've gone far and wide over the last 10 years, particularly as far south as Southend-on-Sea, which is only about 20 miles from London, as far north as Yorkshire, which is North Yorkshire, which is probably only a few hundred miles from the Scottish border, and then a proliferation in the Midlands, both west, where we've really seen some real potential growth, which is continuing as we speak. Our market has been really directed at expatriates and foreign nationals. We've found a sweet spot, a niche in that marketplace, because our experience when we first started marketing in that sector 7 or 8 years ago was that a majority of expatriates were in a position to invest. They were very keen to save money. They were in an environment where they were being taxed beneficially. They were earning more money than they were perhaps when they were based in the UK, and they wanted to do something with their surplus cash and their capital. And the options open to them usually led to a financial services business, which was probably selling them opaquely charged, low-performing funds and savings plans. So we felt that if we could come in and offer a bricks and mortar alternative to that, the product would be very well received, and certainly that's proven to be the case.
For sure, yeah, it has. I think everyone listening in is an expat that's living overseas, so we would agree with you there. Just before we go on to some of the predictions on what's going on with the market at the moment, sorry if you mentioned it there, but what is in terms of track record, in terms of units completed and developments done, can you give people a sort of idea of that, just so they've got an idea of the sort of scale of the business and
sure.
development?
No, that's a good point. So company has now sold over 3,500 properties around the UK across probably 40 sites. And some of these sites in the early days, there's one very close to our offices in Birmingham where there were 7 apartments. So it's easy to have lots of sites when you're doing small projects like that. But more recently, the projects that we've been involved in have been much larger. There's one in Birmingham, which is 229 apartments. And there's one in Norfolk, 300 houses now. So the profile of the business is changing. There's really a more substantial, better funded business with a track record, which means that it's much easier for us to raise funds to help with our projects. So the business is growing all the time, and the profile of what we market is changing, just as the market inevitably changes.
Great. Okay, thank you. Good. Okay, well, just going on to sort of the state of the market at the moment then, and going into the future. Obviously, I think it was a year ago today, a lot of countries, and I think the UK went into lockdown, sporting events were cancelled, all this sort of stuff, and none of us had a clue what the future was going to hold. And I think at the time, there were predictions of recession, which we did have, but more sustained recession and a drop in house prices, and lots of negative talk about the property market. And what we've actually seen is probably one of the best years in a long time, for various reasons. But the market's done exceptionally well. So why do you think, in your view, or what have you seen to indicate why why has the market done so well this year when people were expecting, you know, this time last year for it to fall significantly?
I think everyone's fearful of change and dramatic events, aren't they? And I think those of us who are old enough to have lived through some of those realise that there's always going to be volatility when there's change. And I must say, back in March, and I think we were doing one of these webinars, Callum, about the same time 12 months ago. So
we were, yeah.
So we were wondering how to present a positive outlook when actually we were both doing what every human being does in these circumstances, and that is panic. You know, so whilst we might have looked like swans gliding along the canal, we were paddling very, very strongly underneath, hopefully in the right direction. So our predictions at the beginning of 2020 were that we would have a relatively stable market, property market across the UK, but that there would be pockets of opportunity. And the feeling then was, of course, what we'd had was a great feeling of relief that Brexit had finally been sorted, for better or worse, but at least we had some certainty. And there was no doubt that in those first couple of months of last year, there was a lot of activity. We were seeing record property sales. This was also at a time when Hong Kong was starting to creak with the increased overbearing attitude of the Chinese government, leading to more foreign money wanting to come back to the UK. So it really all looked very well for us. Then the pandemic started to take much more than any of us assumed at the beginning of the year. And I think our views were that we were going to carry on doing business, but it was going to be a really, really difficult 6 months. And of course, back then again, we all have short memories, I think, but most of us thought, well, this anyway, so
that's it. Yeah.
Let's just take a little bit of a holiday and, you know, paint the outhouse or whatever, and wait for things to recover. And it hasn't turned out to be like that. The pandemic's had a much bigger impact than the majority of us ever did. But what we saw after a couple of months was the property market strengthening again, which I couldn't have predicted. It just shows the difficulty of being an economic forecaster, and thank heavens I'm not one.
Yeah.
What's going to happen when you have a global change that we've encountered? Why has it happened? And I think the key point is that certainly we've had a lot of new investors, and I think the feedback from these people, and we're trying to get feedback from our clients and work more closely with them now than we've ever done before. The feedback is that they still want to invest. Actually, a lot of us, you know, our marketplace is predominantly well-to-do or high net worth people. It isn't rank and file employees. You know, so there's a distinction here, and there's certainly a change in people's financial status as a result of the pandemic. But for the well-to-do and above, they're now enjoying, I think, more wealth than they've ever had before. So they're in a position where they've got more surplus capital, surplus income that they're not spending, because actually the pandemic has suppressed their ability to go out and do what they want to do with it.
Yeah.
So they're also predominantly sitting at home wondering how to fill up their days once they've been on their Zoom calls and done their emails for 7 or 8 hours each day. Inevitably, they look for investment opportunities, whether that's buying watches, buying cars, buying houses, you know, holiday homes. All of these mediums of investment become interesting. And I think obviously out of all of those, unless you're very clever with cars and watches, property is probably the most predictable asset class that exists. The UK is a relatively stable and benign market. The political feeling about the UK is very stable. The tax regime is understood, and of course, a lot of the people that invest in our properties are UK born, perhaps even if they're living overseas. So there's a comfort factor in investing in the UK. But we've found that people really quite like the idea of investing in property property as a result, and that's what's driven the market to recover so quickly and to indeed strengthen. The other thing is that, again, we haven't talked about, but Prosperity's philosophy about attracting people to buy property, because we sell off plan, is we allow this ability to pay their deposits over an extended period, be it 12 months or 24 months. And that means that somebody can commit to buying a property, but then pay for it in bite-sized chunks of maybe £2,000 a month or £1,500 a month, which doesn't feel like a particularly risky thing. We're all slightly fearful of making a mistake and losing money. But if what you're doing is you're signing up for an investment in an established business, a good track record of success, building in a UK environment which is stable, in good old bricks and mortar, it's quite a compelling argument. If all you've got to do is take £1,500 a month or £2,000 a month out of your savings each month, watch your savings pot grow, and get frequent updates on how the property's doing, and find out that the macroeconomic climate is allowing property values to rise. It's quite a good story at the moment, and that's probably all of those factors have led to an improvement for us.
Yeah, and I think you're right. We did have before COVID hit, we had a very strong market fundamentally, didn't we? We had clarity on Brexit, and we had all these different things. So yeah, anyway, it's good. So in terms of looking to the future, I know a lot of the sort of research houses, Savills, Knight Frank, were predicting a pretty flat year this year, with the stamp duty holiday ending, these sorts of things. They had flat predictions. Rishi Sunak came out with his stamp duty holiday extension and some other bits and bobs that were very, very favourable for those people looking to buy property, and a lot of these predictions were revised upwards. So again, we're looking at quite a positive year of growth. And if you look at 5-year predictions, the Midlands, the Northwest, the Northeast are all at 20% and above. So does your opinion, yours and Prosperity's opinion, reflect that? Do you think the market's going to stay strong this year? Where do you think it's going to go, and how do you think it's going to perform? Firstly, up until September, and then how do you think the stop to the stamp duty holiday will impact property prices and the property market? Because there are some people saying that we'll have a bit of a cliff edge, a drop off in growth once that holiday comes to an end. So what's your take on that, and what's the feeling in the office and over in the UK?
Important thing with this, again, is for economic forecasters, when they predict a flat market for the UK, that is taking into account all regions. And so, throughout the UK, I think, for instance, in the southeast, London particularly, we still have a difficult market down there. London is still suffering from a rapid rise over 10 years, which priced its attractiveness out of the market. And then we've then had the uncertainty of the pandemic, which has just led to people migrating out of the city, either going back to the countries that they came from originally, or just thinking that now is right to go and live in the countryside, or to go to cheaper areas like Manchester and Birmingham. So the impact of London's marketplace, where prices, we think are going to continue to fall for some time yet, has an effect on balancing areas, perhaps up in the Northeast and the Midlands, where we still think that the market has some growth in it. So I think it's very important to be selective over where you're looking, because comparing what's going to happen in London with what's going to happen in Nottingham, the market is so different. There bears no comparison. So our outlook for the UK property market is good. We don't think there's any great instability in the market. We do see pockets where there are great opportunities. So our job is to try and highlight those, find suitable pieces of land or buildings to convert, and then offer those to people at an attractive price. So that's the vein in which we'll continue for the foreseeable future. But we don't, in this benign interest rate market, and that's another key issue, is interest rates are low. There seems to be no sign of any change in that over the next 3 to 5 years. It's difficult to predict longer than that, but it would be difficult to really see any change even over a more extended period. So with low inflation, there's just so little that we can do to make our money work, and property obviously is one of the things that will do it. And so in periods of strife or difficulty, there has to be people have to look for investments that create yield. No point looking for a capital appreciation, mini stock in the equity markets, because if it get it wrong and it doesn't grow or it goes down in value, there's just no return on your capital. So you just have to look for value from yield, because yield is much more predictable. If you make an investment, you know that you're going to get a tenant in there, or that it's going to generate income from its underlying asset. That kind of helps support the capital appreciation of the asset as well. So I think the key thing for us at the moment is focusing on yield, looking for places where there's a very good prospect of strong rental returns, sustainable employment, new employers that can create yield against a purchase price that's sensibly priced in the market. You're then going to have an asset that's generating income, generating 5 or 6% per annum. We all sigh, a nice gentle sigh of relief, don't we? That at least we're having our money working for us. But of course, it then becomes attractive when it comes to sell it again, and so that leads to capital appreciation. And I think in this benign interest rate and low inflation market, we've got to assume that any time we can get 7 or 8% return on capital per year for a few years, double-digit returns always used to be the great target. But when inflation's running at 0 or something close to 0, we just have to rein in our expectations and realise that a real rate of return on an asset of 6, 7, 8% per annum net is fantastic. And if half of that is a monthly yield and an income yield, then even better.
Yeah, it is. It is very good, and I think that's important. When you are looking at locations to buy, is you need to look at locations individually. You can't look at the whole of the UK or the whole of the southeast or the whole of the Midlands. Within the Midlands, for example, there's better places and worse places. In the northeast, there's better places and worse places. And so you've always got to do your research and actually say, okay, well, why is this location going to go up in value? And I know, for example, the southeast and that sort of areas, London is not a great place to buy, but if you're looking at some of the commuter places into London at the moment, they are, because you've got people moving slightly further out, so it is very, you can find certain locations that perform better, and that's why you need to do your research and look where you're buying. And I suppose that leads on to my next question, which is, where are you guys focusing your efforts? Where do you think are, within the regions we know are going to be good performing locations, the Midlands, these sorts of places? Where are you focusing your efforts? Where are you looking to buy sites? Where are you looking to build? Because obviously you're not going to be buying in places you don't think are sound locations, because it doesn't make sense for you as a business. So where are you focusing your efforts, I suppose, is what I'm trying to ask there.
Yeah, I think for us, Birmingham remains one of our favourite locations, and it's the expansion and change in Birmingham over the last 5 years is remarkable. That's continued unabated through the lockdown. One of the key things in the UK, which maybe just goes back to one of your earlier questions, Callum, as well, but is that the unadulterated support by the UK government for the UK property industry. And I think not every central government has done this around the world. But I think quite early on, the UK government realised that support construction that creates so much energy and effort and in an economy, and they went hell bent on that very early on, which was quite well advised, I think, and that's that whole activity about the point with the UK is that there's still a chronic shortage of property. And so we do need to build housing, not everywhere, obviously, but in a lot of the major cities, housing is necessary. And the green spaces around those big satellite cities like Cambridge and Nottingham. There's a feeling in those cities that there's going to be a radiation out from those cities. Greenfield sites, housing is all going to be particularly. So the support that the government's created in that has been very, very helpful in terms of trying to regenerate the more depressed areas outside of the southeast. And there's no doubt that that's going to continue. We're seeing it. The 2 or 3 announcements last week, the satellite cities around Birmingham, and huge amounts of central government investment into places like Wolverhampton and Walsall and Dudley, and only do good for the communities. And of course, a lot of that is based on high-speed rail link that's coming to Birmingham. Work is underway there, and it's extraordinary how much work is going on that at the moment, and the changes that we're seeing, and the terminal station there is being built. It's really happening, and yet I know in the Far East sometimes there seems to be some speculation whether it's going ahead. Well, I can assure you it is. So we've got roadworks confusing our traffic, and so we're still probably 6 years away from that being completed. But there's a undoubted desire from the British government to create construction to make sure there's enough housing around the UK. I think that's one of the things that helps us in the UK market as well, quite apart from people just having more money to spend to invest into property. The government has identified early on we need to support the property market. So let's provide stamp duty tax breaks to keep the market going. Let's furlough people so they can carry on funding their mortgages. Furlough them so that they can carry on paying their rents and supporting the landlords who are giving them a property to live in. And the government's been very, very clever in doing that. All of that support, as I think one of the questions later on, I think that you've been raised by one of your delegates, is the effects of the budget. Again, the government has gone very strongly into providing 95% mortgages, which we haven't seen for years. This is all in an effort to get people out there confident buying property. And the commitment is there for all to see, and it's long-term commitment. So this all augurs really well for the property market. And our job, as I said earlier, is to go and find those areas where there really is pockets of real potential. And they aren't going to be in the southeast, although we are looking at a project down in Southend again at the moment. That's an exceptional area, but we believe the Midlands, the radiation effect of HS2 coming is going to have a real impact. And then those satellite cities like Nottingham, like Peterborough, like Cambridge, and maybe even a bit further north, Derby, Mansfield, Sheffield.
Yep.
They're looking at opportunities in all of these places.
Exciting.
Yeah.
And where would you, if you were looking to buy, if you had £30,000 to £40,000 to put down, property value of 100 to 130,000, say, where would you be buying personally? Would it be in Nottingham? Would it be further north somewhere? Where
Yeah.
where do you think is the best place? I mean, I would probably buy
Okay,
in Nottingham. I think you get good value for it.
I think the East Midlands is at that price point.
Yeah,
I think the
that's
East Midlands is the place at the moment. So Derby, Mansfield, Nottingham, and maybe a bit further south, quite like Peterborough as well.
Yeah.
So those places, I think. But our goal when we're looking for a site is we work out all of the finances, but the golden nugget for us is that we can find ourselves in a position where we can deliver a 6% yield to our clients. And if that looks sustainable, so what we do is we work from the ground up. We'll look at the local employment. We'll find out what the rental market is like. If people are paying £500 a month to rent a one-bedroom apartment in a city centre location, and we can, and that's £6,000 a year. If we can deliver a nice one-bedroom apartment in a centre location for £100,000, that's going to create the 6% yield, and that's how we work. We don't say how much profit can we make on this property.
Yeah.
We work on how easily can we sell this property, and in order to sell the property, we need to focus on the yield first. So and have to make sure the market is right.
I think
the building of that property.
I think that's a very good point. When you're when you're looking at buying a buy-to-let or an investment, the yield is very important, because when you get up into that 5.5, 6% plus, that's when your income's going to be covering your mortgage and going to be covering all your expenses and all your costs. So I think that is a very important point, to find somewhere that has that good yield, so that once you put your deposit down, you're not having to pay any more. It's paid off by the person that's living in it, which is the whole point, I suppose.
Yeah.
Okay, David, we're 34 minutes in. We've got some questions coming in, and we've got some other bits and bobs to cover off. I think we'll leave the market stuff, or the general property market stuff, there for now. Everyone listening, if you've got more questions, put them in the thingy down there. David, in terms of just, if there's people that are listening and that are looking at buying through you guys, can you just give us a bit of info on sort of security? If they're putting their funds with you to buy a property with you, what is their security, and how do they know over that 2-year period whilst they're building up those funds, that you guys are secure? I mean, obviously you've got a great track record and all this sort of stuff, but what else in terms of security is there to to look after people?
Okay. There are different stages of the property purchase process, and for us, as I said earlier, what we're about is minimising the amount of money that you commit in the early phase of the property purchase. As with every investment, there's risk attached, I'm afraid. So I can't sit here today and say your money is 100% safe the minute it leaves your bank account and comes into our bank account. It's not 100% safe when it's sitting in your bank account, or indeed under your bed. So there's always going to be some risk attaching. In the process that we normally have, you will complete a reservation form and send us a deposit of 5%. The reservation form has some conditions attaching to it, and there is a contract, but it's not a contract to deliver the property at that stage. It's just a contract that we are going to enter into a contract to deliver a property. So the protections for your money at that stage are, I'm afraid, a little bit limited. So in the event that we were to go bust, be put into administration, your money would be at risk. Money that you invest, let's say it's £5,000 or £7,000, just simply goes into a project-specific client account. So it's one of a myriad of client accounts and trading accounts that Prosperity has. And so it just goes in there and it's earmarked for that project. And then dependent on how far into the journey we are with delivering the property to you, so let's say it's a 2-year journey, probably within the next 3 or 4 months, we will be looking to exchange contracts with you. That will be the formal contract to purchase between Prosperity and you as the buyer. And once that contract exchange takes place, it probably takes a month once the paperwork's been prepared and the lawyers have pored over it for hours to justify their fees. Once that's all signed up and we've both signed, then we have a commitment to deliver at a certain time, and obviously at the fixed price that you've agreed. So then you start to have a much higher level of security, because we're bound by commitments to deploy the money in different stages of the construction. In the event that either the builder goes bust or one of the contractors fails to deliver, there are step over rights that ensure that the cost of the construction can't be changed. Okay. It's not something that you suffer, but that we suffer, and the replacement contractor has to sign up for. And then there are also insurances within the contract which ensure that in the event that somebody does drop out of the whole transaction, uplifts, and those big ticket expenses that might be suffered as a result of an event like that are all funded for out of an insurance policy. So there is a guarantee post-exchange of contracts that your £100,000 property will be delivered to you for £100,000, and that the money that's being deployed through that journey, because your deposits are deployed post exchange of contracts, they're deployed into the construction process in bite sizes through that process. But there is a great deal of integrity post exchange of contract. The risk for you is for those first 3 or 4 months, whatever it is, of paying £5,000 to start with and a couple of £1,000 a month. That money is more at risk. But I would say that if you were so concerned about Prosperity's integrity as a business and the way it manages itself, be investing in this medium of investment in the first place. We're not. We're an established business. We're not funded by significant amounts of private equity elsewhere and the stock market listing. We don't borrow huge amounts of money. So we're in the business of delivering property, building our reputation, and we're in it for the long term. So we're not a small developer who's doing 3 or 4 units in one project, and if it doesn't go well, we'll just put that business into administration and start up down the road. We're here for the long term and trying to build a relationship with our clients. So your money is pretty safe. I can't say it's guaranteed in those early stages.
Yeah, and I think that's a good point. With anything like this, you should do your own research and your own due diligence online to see how comfortable you are with it. And I think nowadays and age as well, the world is such a small place with the internet that you'll soon find out, if you're running a business that's not doing the right thing, people will find out, and you can go online and see that you guys have plenty of good reviews and happy clients. Super. I think that's all the questions we had to go through, Dave. Let's open up the floor to questions, as they say. Is there anyone that's listening in? Would you like to drop some questions in the Q&A bit down there, and we will spend a bit of time going through them, and then perhaps we can go through some current development updates. All right, we've got one on just a question around the stamp duty, first-time buyer exemption, and relating to a specific property purchase. I think what we'll do, if that's okay on that, that's quite a specific question to an individual. We'll come back to you with just an individual email or an individual call answer, if that's okay, guys. Because we're just trying to do sort of more general Q&As.
I think just looking at the specific question of stamp duty, it has definitely bolstered the market and created energy again, and that was government stimulus. Do we think it's going to fall off the cliff edge when it all ends? I think the owner-occupier market probably slow down a bit, because there's clearly a great big impetus and a rush to get in before the date closes. But the impact of the stamp duty discounts, whilst very significant for the first-time buyer or the owner-occupier, isn't quite as marked. In fact, it's quite insignificant for the investor.
Yeah.
So the difference between getting your investment property before the deadline or after is a relatively negligible impact. But the general energy that's been created by the stimulus has been good for all of us. I think it will continue to be beneficial.
Great. Okay, thank you. Perfect. So we'll do a little another note, a more personal note on that to these guys as well. GG, the initials, so you know what we're talking about. Questions are coming in, which is great. First one is, where can we get a dog, like the dog on the wall behind you, David, in the picture?
Okay. Well, the black dog is and the white and the beige dog are both Labradoodles, and they have become very popular in the UK over the last 10 years. And I was always the black dog was my partner's dog, and we've only been together for about 7 years. I was always a bit of a cat lover before I came into this family, but these are two of the most adorable dogs. So I would endorse ownership of one of those more than I would a prosperity property. That's how good they're.
Two things in the top three.
Precious creatures.
Lovely. They are lovely dogs. The temperaments of the lab and very good looking dogs. Okay, some slightly more serious questions coming in, David. Broad Oaks, can we have just an overview on the build and what the situation there is at the moment? Have we broken ground? What's going on with that?
Well, Broad Oaks is the biggest project we've ever been involved in. I went down to see the site in October, and I was blown away by the whole thing. It's a lovely town. I know Norfolk quite well anyway, but I'd actually never been to Downham Market. Lovely town. It really is literally in the only large field that exists in the next to the housing of the town itself. So quite how we've managed to purloin that piece of land from the landowners and get planning permission just shows the skill sets of our business at different players, and that's obviously Prosperity Developments part of the business, but a great achievement to get that. The project is clearly a big project and will be delivered over between 23 and 28 months from now. At the moment, really, there's no work going on site. Really is just marketing and getting people to reserve houses, on the site. The activity in terms of sales, the appetite for this type of thing, which is, as I say, completely new to us, has exceeded our expectations. We've launched it in the first phase, but we've much sold out of that first phase, which is almost half of the properties that will be in this project. So that's since the middle of January. So as I say, really exceeded our expectations.
Do you think it's a 24-month period there to build? Will the build take the whole 24 months, or will it be, a case of actually snagging either side and the build's a little bit less? I mean, how will that pan out?
The building never takes anywhere near as long as anyone thinks nowadays. It's such a calculated science, but we won't be digging holes in the ground really until the end of this year in order to deliver the first houses, in the first quarter of 2023. So the build of a house really from getting the foundations into to shutting the door, be decorated. It shouldn't take more than 13 or 14 months. Yeah. Often takes 7 or 8. Again, just going back to the pandemic, one of the things that we've seen over the last 12 months is a rapid increase in the speed of construction. the speed of delivery, despite all these concerns. You know, bathrooms from Italy and kitchens from Italy have all come in on time, and access to bricks has been greater because people, some constructors, some builders aren't building as much as they were, so we've got more access to the bricks, and there are more bricklayers out there, and roof fitters, etc., that are all looking for work. So the construction industry is really buoyant as a result of it. So we are usually quite conservative about the build process, but
yeah,
you know, I would have no concerns about delivering the timescales that we're setting out with our payment programs at the moment.
Yeah, and I think that's a question we get asked quite a lot, is why do you do the whole 24-month thing? And actually, you know, it doesn't take that long to build a new build property. It's more to make it more affordable for and accessible for people to actually be able to buy the property. So
our perception is that people quite like the idea of £1,500 a month, £2,000 a month. But of course, you can join the process of buying a property at Downham Market in 6 months' time, and then you'll have, you know, an 18-month payment program. You know, so and you can marry it up with your preference, the delay between investing for the first time and completion. And Callum will be able to tell you about other projects which are near complete or 6 months away from completion. We can deliver properties within people's time frames and desire for asset allocation.
That's it. And as well, really, you get in, you know, generally speaking, the better choice or pick of the units you would have, right? So it's
yeah, definitely.
You know, it's
well,
really.
There's no doubt that the second phase at Downham will be at an inflated price, I'm afraid.
So well done. That's already bought there. Good on you. Okay, just on the new build stuff. These are all live questions now, David. So in no order really. On new builds, are there, you know, they come with national house builders? Are they all covered by that? I mean, what's the extent of that, and what do people have when they're buying a new build such as this?
There's a legal requirement now on any new construction. It doesn't have to be new build, it's even on conversions. So once we're a national home builder, which we are, we're an authorised national home builder, we have to build within certain restrictions and specifications. And one of those things, one of the features and facets of that means that we have to provide an NHBC 10-year build construction certificate or the equivalent. There are some others that have, so we don't always use NHBC because inevitably they're the most expensive, but they provide the same warranty levels as some of their competitors. But yes, there's always a 10-year compliant build certificate ensuring that the work is authorised for 10 years from completion of the works.
And what does that mean for people that don't really understand or aren't really familiar with it? It means that if there's anything was to go wrong with the build quality, then it's fixed.
Yeah, sure. So this is the basic construction of the building. So it's the building, it's the installation of water pipes, gas, electricity, whatever the services are that's installed. But it isn't white goods, for instance. White goods are covered, and we invariably on our projects we provide white goods as part of the purchase price, and they're covered by their own warranties. That's nothing to do with the build. Yeah. But obviously warranties are attaching to hobs and ovens and fridges and freezers.
Okay, great. And then we have a question here as well regarding the investment. What is the method of payment? I think we've covered a little bit of that there, you know, and the fact that you can actually, you know, you need a 30% deposit that you can pay over 24, 18 or 12 months, depending on how far we are away from completion. in terms of the access, I mean, you guys aren't in terms of actually sending monies to you and paying for deposits. You have an account and you can send it to you from any account, any currency, or how does that work specifically?
Yeah. So we only have a UK sterling-based account that we use for each project. So you have to send the money. You have to deal with any currency transaction that takes place, and then remit to us sterling. So the program, for those of you that haven't invested with us before, is you select an apartment or a house with Callum or whoever your advisor is. Callum reserves that plot. He then sends you a reservation form, which you sign, and you obviously have to provide your proof of who you are and your where you live, and you send that off to us. We then dispatch to you what's called a welcome pack, which gives you a full breakdown of what you bought, verify the terms, and corroborate that that's exactly what you were buying, and it gives you the payment program and all the bank details where you remit your first payment and your subsequent payment, or quarterly if you choose to pay quarterly, and then gives you the contact details for who deals with different aspects of the purchase, who the lawyer is going to be, when the lawyer is likely to be in touch. It walks you through the process.
Great. Okay, and I think you touched on it a bit there, but someone said what one of the questions is, what happens after we complete? Will we be supported in letting our property, in furnishing, if we're furnishing it? What's the after sales process like? Because what we try and do is we try and help people, as I know you guys do, is try and help with the whole process. It's the researching of where to buy, it's the buying, it's the mortgages, it's putting a management company, it's talking about tax and how best to structure property ownership, and even selling it. If people want to sell it, you can sell it to your existing investors, our existing investors. But I think it would be nice for people to hear, from you, how they are supported in that after sale environment.
Okay, so Prosperity fundamentally are in the business of building houses, delivering houses to people. So that's what we're primarily focused on. That's where we hope to make money out of our enterprise, and that's it. We also fully identify, particularly with people living thousands of miles away, that those other aspects of the purchase journey you need support on, and but we don't want to encroach on existing relationships that you might have. So if you have somebody who gives you wealth management advice, that's great. We don't want to step on their toes. If you've got a mortgage broker who believes they can help you with helping you to buy the property, you are more than welcome to use them. If you've got a lettings management company that you've used for other property ownership transactions that you've been involved in, you can use them. But if you want us to provide you with a full cradle to grave service, we can provide you with every part of the property acquisition journey. So that's from wealth management. We can provide you with an overview of how you're building your portfolio, balancing it with stocks and shares and equities. We can do that if you want. We can provide you with tax planning advice. Do I buy it through a limited company? Do I buy it as an individual? Do I buy it through a limited company where I'm living at the moment, or do I buy it through a UK limited company? All of these questions can be answered. When it comes to financing the property, you'll probably be looking for a mortgage, although some people obviously pay cash. But if you're looking for a mortgage, we would start to talk to you about providing that finance about 6 months, 4 to 6 months from completion, because that's when we can start really looking at what mortgage deals are available. And we have that service and facility in-house, that we can certainly help you through that. And we have quite a lot of expertise in that area. At completion, there's obviously the lettings management. And again, we can provide as much or as little assistance in that process as if you want. We have an in-house lettings management company called Lamont & Co. Lamont & Co. do indeed let out most of the properties that we've sold over the last 3 years now. Yeah. They do a great job. Got more expertise about the projects than any other lettings agent, you know, so their service is really quite good, and they would normally get in contact with you and ask you whether you wanted help with lettings a couple of months from completion, so that they were prepared and looking for a suitable qualified tenant, somebody that you can rely on to pay the rent, and you know, with all the proper references, and ensure that they moved in as seamlessly as possible and as soon as possible after formally completed the purchase. And then ongoing, we're there to help you if you subsequently want to resell the property or refinance it or change the way it sits within your overall investment portfolio. We'll do as much or as little as you want. And in terms of, obviously, all those services come with a bit of an extra cost, but the extra cost is obviously down to the circumstances of the need that you have and your inquiry, but they're all charged at the rate that you'd expect in the open marketplace. So you can decide that it's good value, or you decide you can get a better deal somewhere else. Your prerogative to make that choice.
Yeah, and there is cost involved, but you're right there. It's market value, and I think usually it is good value. You know, you guys aren't overpriced. But it's a good point. You know, you can use as much or as little of Prosperity services as you want, which I think is a good selling point. We've got a couple more questions, 3 more actually. If there's anyone listening that has more, please put them in. It's very early morning over in the UK with David, and he's got all day to answer questions for us. So just a few more then, David, if there's no more coming in. What type of apartment is easier? It's easier to sell back to the market, but I'm going to change that to what type of apartment is easier to rent and then sell back, and what type of yield can you expect on a 1 versus a 2-bed apartment, and why?
Right. Okay. As is often the case, there's never an easy answer to a question like that. The decision over whether you should buy a 1-bed or a 2-bed is actually site specific. You know, my own feeling is that generally a 2-bed ought to produce a better yield in a city centre location, and the reason for that is that, for instance, Birmingham is a prime area. A lot of young professionals, and this is the market we're appealing to in city centre Birmingham, a lot of young professionals will end up renting two individuals will end up renting a 2-bedroom property together. So their capacity to fund 2-bed means you've got 2 payrolls paying for the incumbent costs of letting that property. Yeah, it's therefore easier for them to fund the occupation of that, and there are plenty of people that are happy to enter into that type of relationship with a friend or a colleague. So for that reason, I always believe that a 2-bed in city centre is likely to be easier to let, and you're likely to get a better rate of return from a yield point of view. Simply because they've got a capacity to pay more. So a 2-bedroom apartment is never twice as expensive as a 1-bedroom apartment. But the yield calculation is obviously dependent on price, and there will be sometimes differences in the yield between a 1-bed and a 2-bed just because of the price differential. Yeah, the floor level, the orientation, you know, whether it's got access to an outdoor area, you know, all of these things have a little impact on price. So there isn't an exact science to it, but I would say in Birmingham, the sweet spot is 2 beds. One of the things that quite fascinatingly drives it as well is price, and people have we all have lines of resistance over whether we think something's good value or not. And you get up to a certain price level, people think, oh, I'm not paying £250,000 for a one bed. And it's these lines of resistance that you have in every type of market, whether it's an equity or a bond or property. And those price points can vary what yield you can get, and where the demand lies in terms of who's out there buying one beds, who's out there buying two beds. But yeah, bottom line, Birmingham 2 beds I think is best, so long as you realise that a 2 bed these days in Birmingham is probably going to cost you 270,000. So that's the sweet spot for Birmingham. In some of these other places like Nottingham, you know, a couple of the projects we've delivered in Nottingham have been close to colleges, hospitals, and we've found a number of medical students, nurses have occupied these. And interestingly, those people tend to like to live on their own. Yeah. So the demand for one beds is correspondingly higher as a result of that. Yeah, it's one of those things that the answer can go on for hours, and it really just shows how important it is to have, you know, specialist folk advice for your specific inquiry. You need to decide what your budget is and whether you have a preference on the location you want to invest. Once you've done that, then work with an advisor like Callum to try and work out what suits you best, and then we'll do our best to deliver the right type of property for your needs.
Yeah, I think very good answer. You know, you could argue either way. I mean, I would personally say, I would say one beds. You know, because you get young couples or individuals that like their own space going in there, and it is really down to preference, and again down to budget. You know, if you've got a budget of £170,000, for example, and you're trying to buy in Birmingham, you're not going to be buying a 2 bed. You're going to be buying a 1 bed. And if you don't want to buy a 1 bed, then you need to look elsewhere, and you might get a 2 bed somewhere else for £150,000, £170,000. So it's really down to your means, what you're trying to achieve. But I think it's marginal, isn't it? You know, if you're buying in the right place, then there's always going to be people that are looking for 2 beds, groups of people, and there's always going to be people that are looking for 1 beds. You know, so it's about your budget, and I think the location where you want to buy. I think you're better off buying in a good location and buying what your budget can afford than you are saying, well, I must have a 2 bed or I must have a 1 bed. So I think very good question. Maybe a couple of percentage points in yield different perhaps, but I think
yeah, but it is amazing how, and again, bear in mind what I said earlier, and that is we work off, okay, the target yield is, let's say, 6%. So how do we price the 2 beds and the 1 beds to achieve it? And so we then say, okay, well, the rent is £1,000 a month, so the price needs to be X to support that target yield. So that's, you know, the yields generally are very similar in 1 and 2 beds. We do get involved in 3 bed apartments, and the yields there slip a little bit, just because the price is demonstrably more. And again, on houses as well, the yields are a little bit lower, just because houses are a bit more expensive to build because they generally stand on their own.
That's it. But, you know, there's people that love 3 beds because they say there's not many 3 beds in city centres. So if you do have a 3 bed, it's going to rent quite quickly. And I think there's arguments for all of these different points. You know, so as long as you say, as long as you're getting a good yield and yield's covering your costs, your mortgage, and it's paying for itself, then it doesn't really matter, does it, whether it's a 1 or a 2 or a 3. Anyway, there we go. We've got a couple more. Is there any way to secure a prosperity property for less than the 30% deposit? So I suppose this person is asking if they can pay a lower deposit and secure a prosperity property and get a higher mortgage.
We have to familiarise ourselves, the investor and the client, and establish why they think they can get a better mortgage, a bigger mortgage than we believe is appropriate for an investment. So if somebody is buying to occupy, or for instance they're buying to put their children in for, in a university city, for instance. So buying for a relative. So it's in effect it's not an investor purchase, but it's a buy to occupy purchase. Then we are happy to talk about lower deposits. And we do have some arrangements where we can allow people to invest, on a smaller deposit base. But we do have to understand that we need some evidence that it's going to be for owner occupation.
Okay.
The mortgage market is really quite fluid, but at the moment it's very positive. We haven't talked about that today, but the mortgage market is positive. But we do think for investors, you need to be looking for 70% maximum mortgages. If you're looking for a bigger mortgage than that, then it might be possible, but we think it becomes less attractive because the interest rate has gone up. So that's why we tend to target 70.
Yeah, and I would add to that. I would say there's a reason it's at 30%. That's because it gives you more favourable mortgage terms. There's more lenders will lend at 30%, a 30% deposit. So it's generally speaking, it gives you a better term. So you can look for less, but especially on these sort of price point properties, if you're looking at 100 to 200,000 pound properties, 30% is good. 2 more questions. Anyone else got questions? Please put them in. Questions just on company ownership. How many properties do you think you need?
Sorry, Callum, you broke up then. Sorry.
No worries. Just on company.
Say that again. I didn't hear you. Sorry.
Limited company ownership. How many properties do you think you need to have in a portfolio before it starts becoming worthwhile? Let's assume this person has no income in the UK, so they've got their full UK tax-free allowance. How many properties do you need before it becomes worthwhile owning those to a limited company?
I think 2. That's when I'd start doing it. So my view is that if somebody's really thinking about setting up a portfolio of properties, and they really ought to explore the idea of setting a limited company. Like that from out. Really.
Okay, and do you?
We can provide that advice for a series of different.
Sorry, I think the connection. Obviously, a lot of people are getting online for work or whatever it is. What's the best way? Is it better to have one company that would own all your properties, or is it better to own a separate holding company, limited company up for each individual property? What do you think is the best way to structure that?
Again, I think it would be generally it's good to have one company holding a few different properties, but that does change dependent on the tax circumstances of the individual who's bequesting the money to the property company in the first place, and whether they're going to stay non-resident for a long time or whether they're repatriating back. So this is when it becomes a bit more complicated. Something that we need to really drill into the detail before giving advice. Sorry to be vague there.
It's true, it is all very much down to individual small margins a lot of the time, and we can to the person that asked that question, we can put you in touch with the accountants we use for our property stuff back in the UK, and you can have a chat with them, and they won't charge you for that, but you can figure out whether you think it's worthwhile to set up a company. Again, just ask the question, and it's something Prosperity or ourselves can help with. Lastly, last question, student accommodation. What's your opinion on that versus residential? Which one's better? A lot of the time you get promised guaranteed yields, fixed returns for 2-3 years on student property. What's your take on that? And why do you guys not get involved in that? I know why I wouldn't personally get involved in it, but what's your reasoning behind that, and why do you think residential is the way to go?
And student accommodation is a completely market. It's an investment that you make if you're driven solely by yield. And for some people, it's a good investment. For instance, if you're looking at it, let's say you're a retired individual with no beneficiaries, and you're looking to maximize your income from a property-based investment for as long as you live, then buying a student accommodation with some 5-year or so rental guarantee might look particularly attractive, because they might be talking about an 8% or a 10% yield. And that's great in those circumstances, because all you're worried about as a single retired person is the income, not what's going to happen to the capital. So you can liken the investment almost to an annuity. It's, you make an investment into an annuity which guarantees you an income for a lifetime or a set time, and at the end of it, your capital is exhausted. And so, a lifetime annuity will pay the income you live till you're 100, or it'll pay it until you're 65. If you're 60, and it's and the risk is on the provider of that annuity. And so it may suit you if you live 30 years from then, but you have to assume with student accommodation, it's an annuitized investment. So buy it for the yield, but don't expect to make any capital appreciation out of it. And in fact, don't be surprised if it goes down in value. I think if you go into it having understood what it actually is, and it's a product designed to provide you with a high rate of return from an income perspective, but with no capital growth. And if the provider suggests you're going to get capital growth, they're being economical with the truth. Really, is why will it grow in value? And one of the things, just think about your own experiences or your experiences of your children. When you go into a halls of residence, these places are knocked about. They're really mistreated. What's going to happen to that student accommodation? It's not going to be well looked after. It's cheap end, but it does generate good income from the universities and the halls of accommodation and so on. But the resaleability of it 6 years down the road, after 3 freshers have been in it for a couple of years, isn't that attractive. So Callum's been to university, so he knows what it's like. So I wouldn't recommend it. And I think also, a lot of these products out there are being sold on high yields. These things have to be paid for somewhere. So that lovely old adage, if it sounds too good to be true, it probably is something just to have resonating through your mind. Every time you look to make any investment, whether it's a prosperity investment or a student accommodation or a unit trust or anything, just does that sound too good to be true? Because it probably is. Excellent.
And I think perhaps just to summarize that to leave, to wrap up even, it's very important when you're looking at all the different types of property options out there, and ways to invest your money. I think it's often best to go to the end and then work backwards, so what are you actually trying to achieve? And when you know what you're trying to achieve, you can then work backwards and say, well, actually, these types of properties will help me achieve that. These ones won't. And you can narrow down your options. So if you're brand new to property investing and you don't know where to start, well, think, actually, what would I like from this? Would I like monthly income to supplement my teaching job, or would I like income in 15 years from now as a pension, or do I want just capital appreciation? What is it? And then once you've defined that, you can say, right, well, if I want immediate income because I'm looking to retire very soon, then maybe I'll buy some student accommodation because it's a good income play. Or if you want a longer term property for pensions type thing, then you're looking at just a simple buy to let, put a tenant in there, let them pay the mortgage off. Or if you want immediate income, a bit of extra income, then maybe it's an interest only mortgage and you take the extra income. So I think define what it is you're trying to achieve guys, and then once you know what that is, you can go back to the start and say, right, well, what will actually help me get there, and that'll help you narrow down what it is you're trying to achieve. And it's the same, you know, the 1 or 2 bed question. Well, if you know what it is you're trying to achieve, then maybe that will help you answer that question. So there we go. I think maybe we can leave it there, unless you've got anything else to add, David. Appreciate your time as always.
No, that's fine. That's been a pleasure. Good luck with your property investments, everyone.
Yeah, thank you very much, guys. Thanks for tuning in. We'll do our next quarterly review next quarter, believe it or not. And to those prosperity clients tuned in, we'll send out updates on the current developments. And something Prosperity are doing now is doing, how regular are these updates you're going to be doing, David, on the developments?
Doing them every month now. So we do an update just on the build process on each site, supply some photographs, have a question and answer as well for anyone who needs question answering as a result of the content of that seminar. But of course, you can always one-on-one if they want.
Great. Now, how do people find out about that? You'll just get an email?
They should be getting emails just directly off our marketing team. So they'll be just being sent out to them, inviting them to join the Zooms.
Excellent. Okay, well, perfect. Thank you very much. This is going to go up on our YouTube, David, so I've got to say like and subscribe, hit the bell button, and all that sort of stuff. We'll chat again in a couple of months, David. Thanks for your time, and hopefully Joe gets better soon. Hopefully we'll see you on the next one. Okay.
Thanks, everyone.
Cheers, guys. Take care. Thanks. Bye.